the world of sukuk within the world of Islamic finance is roughly in the order of about $150 billion in terms of outstandings at the moment. A majority of these sukuks are being issued out of Malaysia, and the balance coming out of the GCC, which is the Middle East region. The difference between Malaysia in terms of the sukuk issues and the GCC is in Malaysia, we're getting issues done in two currencies, US dollars for international investors and local currency, which is the Malaysian ringgit. But corporates are actually relying less on bank lending in Malaysia and tapping into capital markets and actually using that as a source of funding by going directly to the capital markets and engaging with the investors for their balance sheet needs, working capital, and the expansion of their business. In the case of the Middle East market, the sukuk issues are largely what we call big ticket items, $1 to $3 billion, and sometimes a bit more than that. And these are used for financing, for example, purchases of aircrafts, or for infrastructure projects, or for building a refinery, for example, or for example, building roads and the infrastructure of the country. And I think that that is where the big ticket items are coming from. They are also denominated in US dollars. Now, these sukuks, before I come to the other question, are actually listed in two places, majority. Of course, they're listed in their domestic markets with a dual listing, either in London, on the London Stock Exchange, or in Luxembourg, which is the Luxembourg Stock Exchange. Roughly, there are about, I think, 15 to 16 issues in London, north of about $6 billion, and a similar amount actually existing in Luxembourg. Now, these sukuk papers or securities are largely purchased by financial institutions, which are banks, fund managers in some cases when supply is available, and by the insurance companies, again, subject to supply being available. Why do I say subject to supply being available? Because the balance sheets of the Islamic financial institutions for their liquidity management need sukuk. The problem with sukuk at the moment, as I mentioned, is $150 billion of outstanding. And as you know, Islamic finance is a $1 trillion industry. You can see the gap is quite large. And hence the supply of sukuk is in short supply or scarce. Now, as the global economy is beginning to rebound, one healthy sign of development is that institutions like the World Bank, like General Electric, like Samsung, like Hyundai from Korea, are using the sukuk market for diversifying their own investor base, and they're issuing these sukuks out of Malaysia. Petronas, which is a major energy company in Malaysia, has also done sukuk issues. And I think you will see that over time, sukuk industry will grow. The biggest market within the Middle East, potentially, for sukuk is Saudi Arabia, where at the moment, the companies or corporates in Saudi Arabia are rather heavily reliant on bank lending. As this market begins to develop, capital markets, within Saudi Arabia, we will see more issuers, which means corporates, coming to the sukuk market and tapping directly into the capital markets as opposed to going to the banks for their lending or financial needs. That is one thing. In terms of the sukuk funds, what we call balance funds. What is a balance fund, first of all? A balance fund is a mixture of equities and what we describe as fixed income. A sukuk can pay either a profit share, which is either fixed rate or a variable rate, similar to a bond, but it's very different to a bond. So you can either have a fixed rate profit share sukuk, or you can have a variable rate profit share sukuk for the investors, generally paid semi-annually. And this is where the income is generated for the balance fund. So the balance fund could be, for example, 60% sukuk and 40% equities as an example. Or it could be a 50-50 structure, 50% equities and 50% could be made up of sukuk. Now, this is where the real, shall we say, potentially one of the largest opportunities that this industry has is to develop the sukuk market and at the same time offer these issues to the balanced funds. At the moment, we don't have that many balanced funds, and that I think will be very, very helpful. More recently, Qatar Islamic Bank, which has its asset management arm in London, has launched a Sukuk fund, which has roughly got assets of $80 million plus, registered in Luxembourg. And again, I think this is a very, very healthy development. Sharia compliant investing is actually focused on certain sectors within the real economy. So we already mentioned, or I rather mentioned, that, for example, financial institutions is out of it. Normally, in volatile market conditions, the first line or sector which is impacted is normally the financial institution sector. And this means that bank stocks and stocks of insurance companies are the ones which are impacted. So as Sharia does not allow investment in banks or insurance companies or other financial institutions where interest income is being earned or the effect of leverage is being applied, therefore, to that extent, the Sharia compliant screening protects the investors from volatile market conditions. However, there are other sectors like telecommunication, like media, like computers, where some volatility is also there in volatile times, whether we're talking about 97, 98, 2001, 2002, which were the bear markets, and again 2008, which was the major impact of the global financial crisis. And I think here it's really a question that the sheltering is really done partially by the sectors in which the Sharia compliant investments are put, and secondly, by some of the actions taken by the fund managers to reduce their exposure to the stock markets when markets are volatile. Now, of course, if you're invested in liquid shares or quoted on a stock exchange, it is much more easy to come out of those in volatile market conditions. Whereas if we are into small to medium cap stocks, and which are to some extent more illiquid, that would be more difficult to come out of. And therefore, I think the managers take a view as to where they're investing and how they're investing. Hence the popularity of exchange-traded funds, which are far more liquid, and they are based on a basket of stocks. And this is why they are gaining popularity in the Sharia-compliant world. As I mentioned to you, that some of the providers include Barclays, Deutsche Bank, and other providers have come into this market, CIMB in Malaysia, for example.